We want to bring in Calamos Investment CEO John Koudounis right now. And John, it is good to see you this morning. Thank you so much for joining us.
Thank you, Maria.
Congratulations on a great couple of years at Calamos. You took over as CEO 2 years ago.
Correct.
Assets under management at the time was $16 billion.
Just over that, a little bit over that. Yes.
And now you're at $23 billion.
Just over $23 billion.
So how do you gather assets in an environment where you do see the nervousness that we see and worries over the slowdown?
Well, I have to give a lot of credit to our founder, John Calamos. He's built an incredible firm. And the fabric of our firm is we're great risk managers. And our portfolio managers have done a great job. We've used convertibles to do that. And in this environment, it's been very, very effective for us. If you look at these conditions of possible rates rising, of huge volatility, a lot of our funds solve for those problems. And that's why we've seen an incredible amount of inflows.
Yeah, you've got these inflows and you're allocating it differently. Do you worry that things are about to slow down? Because that seems to be the market worry. Of course, yesterday after the Federal Reserve Chairman said that we're close to neutral, basically giving the market what it wanted, we saw a 600-plus point rally, but it's been a really tough month. So tell us how you're dealing with this volatility in markets.
Well, when we look at the markets, we take a very long-term perspective. And it was not a huge surprise, at least to me, that the Fed was going to be accommodative. A lot of the numbers that were building up to this led for this decision. And so there's going to be noise back and forth.
But they're not really accommodative. I mean, they've raised rates 3 times this year. They're going to raise rates again on December 17th at the next meeting. That's 4 rate hikes, and we're expecting another 3 rate hikes next year. Will these higher interest rates slow down what has been a very strong economy on the president's economic policies?
Well, they're saying that they might do another 3 interest rate hikes.
You're not buying it.
I'm not buying it.
You're not buying it.
I think they will be accommodative. And I think we're starting to see that language yesterday. And that's why we had that move of over 600 points in the Dow. So what do you do to protect yourselves? There's certain alternatives that you can use to protect yourself. We have market neutral that protects yourself in volatility.
We have market neutral funds, yeah.
Market neutral funds. It's had a huge inflows in the last couple of years. It's up over $6 billion in terms of AUM on that particular fund. We have a Phineas long short that deals also with the market volatility because you're buying long and short. And we've seen that particular part of the firm, the liquid alts, convertibles have done really, really well. And if you look at the market since 2008,
right,
we've had 21 corrections that have been over 5% in the equity markets. All but one of them, convertibles have outperformed. So just the mere fact that convertibles get you the majority of the upside and limits your downside, they work. So what's been our secret of successes? Our managers have done a great job, but they're doing what they're saying that they're doing.
Right.
Our funds are doing what they're saying that they're doing, and that's what people like. They trust us.
How do you deal with this race to the bottom on fees for some of your competitors? I mean, you've got lots of things coming at you, whether it's Fidelity cutting fees to rock bottom levels, and Vanguard doing the same thing on ETFs and index funds, as well as, you know, people saying let's go passive instead of active. Then you've got fintech coming at you with technology. How do you address all of these things coming at your traditional money manager firm like a Calamos?
That's a great question. And frankly, a lot of people have had difficulty with that. And you've seen other firms our size actually going the other way, where AUM has been decreasing. How do you deal with that? A couple years ago, I know that I've been on your show, we're talking about passive was extremely in, and when the markets were going straight up, why do you need an active manager? We're active managers. There's nothing hiding about that. We're very active. We have to justify our fees. And you're right, it gets harder and harder as we get fee compression in the markets.
So you're saying good managers are going to be able to give you alternatives when markets are going down. You're going to want that active manager as opposed to a passive manager.
Not just I'm exactly saying that. Not just when markets are going down, but when they're volatile. People need their hand held. Most of our base right now is retail. And we have incredible distribution through our intermediaries, our RIAs. We're on all the wirehouses from Merrill to Wells Fargo to UBS. And a lot of our clients are mom and pop. And so when they see these markets, they're looking for solutions. We were the #1 inflow asset manager for the last 12 months out of anyone in the world. And we stand in a great company, top 10 guys, people like BlackRock, Blackstone, Goldman Sachs, PIMCO, great firms.
What's working now then, John? Tell me what's working.
It's active management in
but
this particular
what particular
space.
funds?
Since the volatility, since the current administration, since they've taken out the regulations or limited them, since the tax cuts, things have changed. Markets have changed. People are trying to navigate through them. And so when we have people that have been dealing with this, our firm's over 41 years old, have been conservative, and have been have great track records over the long run, it works.
Right. So where do you want to see so where are you seeing the performance right now? You mentioned liquid alts. Is that where your alternatives?
We're seeing.
Where's the performance? What's working now?
What's working is our liquid alt books are outperforming both equities and the bond market, and some of them are bond. We use them instead of bond funds, and some of them are just alternatives to straight growth equity funds.
What about straight growth equities? Do you still like growth? Do you still see sentiment on the part of your customers, your clients, wanting things like Apple and these growth funds that have seen such volatility?
We're seeing a slowdown in that particular market, because when you see some of these volatilities and the downturn of the market, there's always the growth versus value type of question that comes out. And then you have to be a lot more specific in what stocks you pick in the growing market.
So in terms of the growth, and where is the growth? Within the growth sector, are you seeing any other real performance coming out of some of the growth equity portion of the firm?
We're seeing a huge internal cyclical move where the FANGs were leading the markets and it was the biggest percentage. We're starting to see other stocks, whether it be tech. We feel that finance is still going to do really well, the bank stocks. So we're seeing movement out of some into the others.
So an allocation shift is going on.
Huge allocation shift, and we're not just seeing a pull, we're just seeing more of an allocation shift and a slowdown of growth in some of this.
Do you worry that rates are going to spoil the party a bit, higher rates?
Look, there always can be mistakes that are done, but I think Jay Powell's doing a great job. He knows what he's doing. He will be accommodative. They say 3 rate hikes. I don't believe it. Unless the market is so strong and growth is so strong that they will do those hikes, they will watch it. And it's not all the battering because of the current administration saying. They may listen to that, but I think they're looking at the data, and they know that nobody does well if they choke the market by raising rates too quickly.
Yeah.
So they're going to be very, very looking at all the statistics, and I think they're going to continue to be accommodative.
There seems to be a better tone right now. I mean, the market's lower, futures indicating a decline at the start of trading, but it's only 20 points, and this is after a powerful rally yesterday.
Sure.
Did it feel like you wanted to buy into that rally yesterday when things were moving up? Were you on the buy side, or were you selling into the strength?
I think there's been a lot of cash on the sidelines.
Yeah.
And I think a lot of people were looking for this opportunity, and that's why we saw that big of a movement. And the market kind of sensed that Powell was going to say some positive things for it. So we saw it go up, and then we saw it double again, the increase after the speech came out.
Yeah, it's incredible, because as soon as the embargoed comments came out, market shoots up and then stayed up 500 points while Mr. Powell was speaking. It's great to see you, John.
It's great to see you.
Thanks so much. John Koudounis joining us there, CEO of Calamos.